This is RealAg Live. And welcome to RealAg Live, everybody. I'm your host, Shaun Haney. Thanks a lot for tuning in today. It is WASDE Day, so we're going to do a full breakdown of it. If you have any questions or comments for our guest, all you have to do is enter your question or comment in the box, whether you're watching on YouTube, Twitter, or Facebook. So like I mentioned, it is Markets Day here at RealAg Live. Lots to discuss, what's going on in the corn, bean, wheat market, and we will dive into some of the other fringe crops as well from a global perspective. Let's bring in today's guest. It is Ted Seifried of Zaner Ag Hedge. Hey, Ted, how are you?
Doing great, Shaun. How are you today, man?
Hey, I am doing great. Now, Ted, we could talk about a lot of other things, like
Sure.
both of us being buddies on Peloton. Maybe we could talk about how great the Bears are looking after the draft. But we
Yeah,
better
baby.
we better focus on the markets. We're gonna go through these crops, but overall, if as you look at things today here, what's your overall reaction to this report?
Okay, so this report came out very much as what we were expecting, not necessarily what the market was expecting. The market was disappointed by the numbers that we saw for the new crop corn balance sheet. And that's coming even with a tighter old crop balance sheet and lower beginning stocks. The USDA cut new crop demand pretty aggressively. There's going to be a lot of people that say that 325 million bushel cut in new crop corn exports, or not really cut because this is the first time we're seeing their new crop balance sheet on a WASDE report. Rather, 325 million bushel less in exports year over year. Yeah, people are going to call that into question a little bit, especially since the numbers were tabulated before we saw the 3 million metric tons of sales to China for new crop corn. All right. So, yeah, you're going to have sort of a bull contingency out there say, yeah, but that corn number, it's not accurately reflecting what the exports could be. And that could be a tighter balance sheet. To that, however, I'm going to say, all right, but look at what December corn has done since January 1st compared to November beans. And if we talk about the possibility of being more acres out there, I'm not going to say that beans lost acreage. Gosh, we really couldn't afford that. We certainly can't afford to have lost acreage in beans. And this report put a fine point on that. But if anything gained acres in a bigger way, it's definitely corn. So I'll give it to the corn bulls that, hey, maybe if the USDA were to do their export numbers again today, knowing what has happened in the last week with the exports massive sales to China. Maybe they would kind of reverse themselves and not have exports going down 325 million bushels year over year. But also, yeah, if we're going to gain 2 million acres in corn, which is currently where I stand, that's more than offsetting. And a 1.5 billion bushel carryover, while it is much tighter than what we had been seeing for the previous 4 years, not including this old crop season, but the 4 years leading up to that, when we were talking somewhere in the low to mid twos or even a 3 billion bushel carryover, yeah, it's much tighter than that. But it's not a situation where we need to price ration corn in a massive way, or at least any more than we have. So I don't know. In my book, I feel like now is the right time to see a bigger break in these markets, really led by new crop corn. And then it all boils down to weather. What are we going to get for yield? Some people are going to argue that 179.5 trendline yield that the USDA is using is too high. Okay, yeah, I mean, it's 3 bushels higher than what our previous record was. But we've been talking about for years how we can hit 180 given good weather. We'll have to see what the weather is like. If we do at some point have reason to believe, and again, a lot of people will say the dryness in the West is a good reason to believe that now, but in my book, it's way too early for that. But if we do have a reason to believe that we're 176, 175, 174 national average yield, okay, this story can get hot and heavy again. So we will be on our tippy toes for the weather market this year. And any signs of concern are going to really heat this market back up. But for me, that's more of a June, July thing rather than a right now thing. Right now, I think the market's done its job, rationing some old crop corn. The old crop corn, cash market's been tight. There's reason for July corn, I think, to be trading where it is. But the massive gains that we've seen in December corn, I think we kind of overcooked that a little bit. I think we had a different scenario in our heads rather than a 1.5 billion bushel carryover. And to me, I'd see 40 to 60 cents downside potential from where we stand.
Yeah, if you think prior to last year, we had 2 or 3 years of where there was a lot of talk about it's the yield. I don't know, it's not there. I don't believe USDA, and the farmers came through, and we delivered on yield. And a big part of that is the fact that genetics have really improved to withstand some of these, I guess, less than ideal conditions, whether it's on the wet side or the dry side.
Absolutely. And look, this genetics conversation, this corn yield conversation, that's one that I think will rage throughout the summer. But, what I'm going to say is that the growth that we've been seeing the last couple of years in soybean yield is outpacing the growth that we've seen the last couple of years in corn yields. We had in the early 2010s, not including 2012, but 14, 15, 16, we really saw that trendline yield push higher. The genetics had gotten better. We were getting surprised. I kind of feel like in the last 2 years, we've sort of noticed that, hey, maybe we're sort of hitting a plateau on this massive growth in corn yield, whereas soybeans have been the one that's really been gaining. So I don't know. I actually do really kind of feel like a 179.5 might be a little bit too high, knowing what I know today. But I'm also going to say the variability to the downside is a lot less than what it's been in years past.
Yeah.
I really don't think we're going to see something below 172 unless we have some really massive weather problems. So I think that sort of yield security that we've been going through, it doesn't make us as worried when we see weather stories, or maybe we're a little bit later to react. Last year, we were, I think, way too late to react to the reality of the problems that we're having in Western Iowa and everything that happened with Dureco. I mean, that was something we'll probably not see in our lifetimes again. That amount of damage caused by a 24-hour weather event. But aside from that, when we talk about hot, dry, and percentage of moisture or whatever, corn can withstand a lot more than it was able to, in years past. So again, I look at that balance sheet the USDA gave us today, 1.5 billion bushel carryover. I think it justifies 5.25 to 560 corn. I don't think it's 650 corn, at least not until we know more about weather. And like I said, I do feel like at some point during this growing season, we'll get back towards the highs again, maybe even make new highs, depending on how bad a weather situation might be. But at the very least, we'll get scared about something and we'll put some premium back in the market. So I don't think this is over. I
Yeah.
just think it's over for now. And I think maybe we had gotten a little too high for where we needed to be. Now,
But a
beans
pause,
are a completely different story.
yeah, and a pause can be okay for a market. Like
Yeah,
that we see that a lot of times in the equity market, just raging higher. You get
right.
overheated. A pause, a breath, time for a little bit of fresh air can be actually a good thing long term for a bull market.
You right, because you know what pauses do, and especially if we were to get a break in the market, well, that brings back some of the demand to the table that has been kind of shying away at the higher prices. So
Yeah.
let's back and fill some of that demand. Then we can get bullish again. But if we continue to just go higher and higher, then the USDA is right. We kill off that demand, especially the export demand, because there will be countries that say, "Hey, this is getting too rich for my blood. I'm going to go and look for other alternatives, or I'm going to go to other countries. I'm going to wait." Yeah,
Yeah.
right. So let's buy that demand back a little bit.
Okay, December corn was down 18 and a quarter to 593 flat. Beans, like you said, different story. November beans
Hmm.
up 12 and a quarter to 1443 and three quarter. What's going on here in soybeans? What does this report tell us?
Well, like we talked about, Shaun, December corn had gained dramatically, like unprecedented fashion, uh, over November beans since the beginning of the calendar year. And I think in the last week or so, as we were getting ready for this report, as guys like me were doing our balance sheets, so that we're trying to guess what the USDA is going to say on their first blush at a new crop balance sheet. Um, we're pushing the pencil and we're saying, oh wow, this bean balance sheet. I mean, we're in the same position as we were this year, which is a razor thin carryover, and it could be worse depending on weather. And that's including a pretty sizable decrease in demand for next year. And we're still only at 140 million bushel carryover. And so when we're putting out these estimates going into the report, I think the trade was really reminded that, oh, we probably needed to buy bean acres and not corn acres, except for we did the opposite of that. So, whoa, November beans all of a sudden kind of became the darling. And then also, wait a minute, we have a really tight balance sheet between now and the end of the marketing year for old crop beans. So July just really took off the last couple of days. We were 45 cents higher going into the report. Now we took some of that off after the report came out because the USA didn't tighten the new crop, or I'm sorry, the old crop carryover, left it at 120. But either way, I mean, between now and September 1st, we theoretically, I mean, are going to get to pipeline beans a virtual zero carryover in soybeans. By the way, 80 million bushel is zero for soybeans. I mean, we
Hmm.
can't get below that 80 million pipeline for soybeans. So we're so close to that. So again, I think we had forgotten for a few months. We had forgotten how bullish the soybean story was, and part of that's because we're worried about ASF over in China. They haven't been buying as hot and heavy. We didn't have the Brazilian weather story for soybeans. We had it for corn. The second season corn crop was the at risk crop, not soybeans. So the news, the fresh news, had all been for corn, and corn ran with it. But again, in the last week or so, and this report really puts a fine point on it. Oh boy, the soybean balance sheet is where we really could see fireworks, in my opinion. And I think that the November contract, that November soybean contract, I've been saying it for months. I think that is the most undervalued thing on the grain board right
Hmm.
now.
So you think there's lift in that yet?
Look at where July beans are trading. I mean, we were up at 1660 earlier today. I think minimally November beans can get to those levels. That'd be $2 higher than where we're at right now.
Wow. So, like, how does that factor into farmers trying to figure what their marketing strategy is? Then, like, boy, this is a really even though prices are high, Ted,
Yeah,
it is super stressful when I talk to farmers. They don't. They know they sold too early last year, but they
yeah.
also don't want to sell too early this year, but they also don't want to totally miss the boat if this market pulls back.
Well, Shaun, there's a difference between selling too early at $8.80 and selling too early at $14.60. Okay, there's a saying. I don't like cliches, but there's a saying in the markets that's been around since well before I was born, is that pigs get slaughtered, right? And I was
Mm.
just having this conversation with one of my producer clients who has sold zero for new crop soybeans so far. First of all, congratulations. You waited it out. You've got some good prices. Second of all, yes, I think prices can go higher. But let's say this. I'm not suggesting you sell 50% of your crop right now, but let's say you did at 1460. I think there's a pretty equal chance that we're at 1260 or 1660 by the time we get to harvest. So either, I mean, if you put half in here, you've protected half of your crop. And again, I'm always a big fan of re-ownership strategies, and I like to use cash sales and future sales to manage my risk, and I like to use call options to manage my opportunity. Right now, I think is a wonderful time to do that. You could be making some really fantastic cash sales where you're really very profitable, and then you can come in and spend 20 cents on a November soybean 1540, 1640 call spread that's going to give you $1 back if we do rally to the upside, and improve your cash sale by $1.
Yeah.
Look, why not do that? I mean,
you're,
buying puts is really expensive, but that's creating a synthetic put, by the way.
Okay, so you're buying a call option $1 out of the money on soybeans then?
For right now, yeah, because they're cheap. Honestly, the reason I'm doing that, I'm calling it sort of a Band-Aid strategy or a starter strategy, because I really have my eye on wanting to improve that. I'd love to see an 80 cent to $1 break in November beans so I can pull that 1540 call down to 1440 or 1460. And then I have this just really nice, wide, sort of all-encompassing call spread to last throughout the growing season on any sort of weather issues. And it would have allowed me to pull that long call down to right around where I made my cash sales. That's the hope. If we don't get that pullback and it just goes straight higher, well, at least I did something and I have something on. But yes, I would like to improve it if given the chance. If not given the chance, that means the market's still going higher. That means that I have better opportunities to make cash sales further down the line still. And it means that my 21 cents likely is going to turn into that $1, which is going to help out the cash sales that I made it already really very good profit margins.
I don't think I'd be brave enough to start selling puts, though.
No, selling puts is not something that I would be doing at this time of year, really, anyways. No. And selling puts, from a producer standpoint, selling puts is not something we do very often at all. Now, my end users, sure. Give the market a reason to come and target your price, price target down below and take something in on top of that, sure. But that's a different strategy. That's for different people. From a producer standpoint, I hardly ever recommend the idea of selling puts.
So these higher prices, has it rationed demand? Have we seen any sort of evidence on that on the corner beans?
I mean, so that's exactly what this report was about here today, Shaun. We didn't see any demand ration for the old crop. USDA did not put any bushels back on the demand side of things for old crop soybeans. In fact, they really decreased the old crop corn carryover more than what we were expecting. So their answer, at least to that so far, is no. But then when you go further out in time, when you deal with the December corn contract that has spent the life of its trading cycle in much higher territory than what last year's December corn crop did, December corn contract did, and the USDA does say, okay, we are rationing some demand for the new crop corn, hence the 325 million bushel decline in exports for next year.
You mentioned pigs get slaughtered. I just thought of, I think Jim Cramer from CNBC wrote a book. It was like, bulls make money, bears make money, pigs get slaughtered. I think that's, or hogs get slaughtered. I think, if I remember right, for sure. What about wheat? What do we find out in wheat
Pigs
today?
get slaughtered. And again, that was well before he wrote that book. Good job, Jim Cramer. Bye. But
ding, 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 ding. Yeah.
He stole that saying.
I know.
That's not his brainchild, just so you know.
What about wheat?
I hope he's watching, by the way.
Oh, yeah, I'm sure he is. Yeah, he's got
me, Jim.
He's got lots of stuff to do. We'll talk about wheat, Ted.
Actually, before one of my fellow Zaner compadres, Carly Garner, she's featured on his show on a fairly regular basis. So we do have ties to Jim Cramer.
Oh, really? Oh, cool. Yeah, I enjoy watching Squawk in the morning. Him and David Faber going back and forth. So good stuff.
He is entertaining.
He is that, and was a pretty successful hedge fund manager at before he moved into the media side. We got a lot of spring wheat growers in Western Canada. How should they look at today's WASDE on the wheat?
I didn't have a whole lot of takeaway on the wheat report. I mean, it just, to me, that was sort of taking a back seat to what was going on in the corn and the beans. But, with the weakness that we saw in corn, wheat was not immune to that either. I think there were definitely some people that were looking for a more bullish wheat report, specifically in the spring wheat. We just didn't see it. Maybe the USDA is just not there yet. Go back a week or so, and we were, at least myself, I was concerned that with the dryness that we're seeing in the Dakotas, maybe guys would pump the brakes on planting wheat. That didn't happen as much as I was expecting.
Yeah, okay.
So I've gotten a little bit less enthusiastically bullish in the spring wheat over the past 10 days or so. And the chart reflects that too, but longer term, I still think more upside potential. I think spring wheat in the particular is the one that has that upside potential, more so than Kansas or Chicago. But if this is going to be a time frame for a break in corn, and I think that the timing's right for a bit of a break in wheat as we continue to plant spring wheat and it's going in. And yeah, like you were saying earlier, it's kind of healthy to have breaks in the market. And I wonder if this is just a healthy break in the market for the grains, for corn and for wheat.
I saw a little bit of commentary on Twitter from some of the Eastern European people that I follow. Large expected output out of Ukraine and Russia on corn and wheat.
Yeah.
What are your analysts and insights saying about that?
Well, so that goes back to the whole idea of the cure for high prices is high prices, right? So when you have high price corn and high price wheat, what happens? We start to kill off some of the demand, which, to your point from earlier, or to our point from earlier, we haven't really seen that in old crop yet. But for new crop, the idea is that, okay, we're going to see a little bit less demand, and we're going to see everybody who can produce more wheat, produce more corn, they're going to do that. Russia and the Ukraine certainly are going to try to do that. Now, weather's going to have a big say in that. But I think we'll see more acreage there. I think we'll see more corn and wheat acreage in Argentina. I think China is going to have more corn and wheat acreage, or they're going to really try for it. Yeah, again, high prices really bring out all the supply, right?
Yeah.
I mean, we're gonna try to grow as much $6-7 corn as possible. Same thing for wheat.
People will plant corn in the Arctic when prices are like this. The
Yeah,
other one
right.
was
I've got about 6 plants corn growing in my backyard right now.
Brazil. Some people saying that USDA in this report too optimistic on Brazilian output based on some of the weather conditions. Do you buy that?
Yeah. Okay. I mean, I see. Okay, so when you're saying too optimistic, they're saying that the 102 million metric ton corn number is still too high,
Yeah,
or
yeah, yeah,
they
yeah.
cut it too much.
No, they
Still
did
too high?
not cut.
Okay,
They didn't cut it enough. They
didn't cut enough.
Yeah.
Gotcha. Okay. So I'm also in that camp that I do think that eventually it will come down below 102. But the USDA likes to do things in measured increments, and for them to go from 109 to 102, by the way, the average trade guess was a little over 103. I think that felt about right for me. You still got about 40% of the Paranach crop going through pollination right now, and if they get the rain tonight, which I don't think they will, but if they were to get the rain tonight that was in the forecast, or chances for rain that was in the forecast, that might stop the bleeding, and maybe you say 102 is okay. That's a possibility. By the way, some of the numbers coming out of Brazil themselves are still 102 to 105. So no, I think for this report, the USDA did the right thing. 102, that number works for me for now. Let's check it again in a month. I could see that going down to 98 potentially if they miss out on the rains. But if they do get the rains, maybe it only goes down to a 101 or a 100 flat, or maybe it stays at 102. But yeah, for me, from last month to this month, 109 to 102, that made a lot of sense to me.
Now, we got to let you go right away here because you got a webinar to hop on to talk to some Zaner clients. But finish up with this, Ted. What should producers be watching for the next, the several months ahead here? What is a key thing that they need to be paying attention to?
Okay, so to sum up, we've had a really hot and heavy rally, specifically in December corn, starting at the beginning of the year. Actually, these rallies have been going on for a while, but corn really accelerated. It started at the beginning of the year, kind of left beans behind. I think now we're at a time frame where corn can take some of that back, but that bean balance sheet for me is the most bullish thing that we've got going on right now. Any sort of hint of weather, beans can go sharply higher. I'm a buyer of beans on any sort of dip. And again, as a producer, I want to sell here. put on a call spread that I can look to try to improve in at some point. And this is my risk management strategy. I'd like to see guys 30 to 50% sold on new crop beans. That being said, yeah, it's going to be an interesting summer. I mean, I don't think this is over with. It's just we're going to have some very volatile markets. Speaking of volatile markets, dog coin, dog money, everybody. Let's go.
We worked in
Daddy needs
crypto.
A new Tesla.
Yeah, we worked in crypto.
That's how I get paid nowadays. Come on.
Hey, Ted, thank you so much for joining us here today on RealAg Live. All the best, and we'll talk to you again soon.
Thanks, man. Go Bears.
Go Bears, exactly. Everybody tune into RealAg Radio, Rural Radio 147, 4:30 Eastern today. We're gonna have a further breakdown of the WASDE as well as the top ag news story of the day. Cheers.